You're mad about it, it's super, so we're mad about it. We're going to talk about the goods, the bads, the processes, don't panic, and what you can do about it. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about super. Okay, so we've got 10 minutes. The bell will ring every 2 minutes. We're going to cover the topics as we go through. Paul, the good part. Let's start positive.
Yeah, there are a couple of good parts. So the over 65s can now make contributions to super, no work test.
Okay.
So they can do up
Until
effectively age 74. And that's a really good thing because a lot of people out there still building up their retirement nest egg, want to contribute and don't have to go through these rules, silly work tests and the rest of it. Yeah. Also means that those who are retired would put more money back into super, might have got money from another source, can also do so. So that's a really good part. Secondly, Peter, the tax deductibility for making personal contributions. Previously you had to be self-employed. There's a whole lot of complicated rule tests. You couldn't have more than 10% of your income from employment sources. That's all gone. So even those that don't have an employer can make a contribution,
up
get
to
taxed
cap, 25,000
up to the cap, a tax deduction. And then two other good changes. I thought the keeping the Labor Party's low income tax offset. They've called it something different, but I thought that was a bit of a no-brainer. And finally, for those of you with a spouse, particularly a non-working spouse or a spouse that doesn't earn a lot of income, the old rebate of or tax offset of $540 for making a spouse contribution of $3,000. The income threshold's gone from $10,800 up to $37,000. So if you do have a low income spouse, you can get a bit of a tax offset for making a. And
where does the 540 go? You put the $3,000 in.
You get it. You get it. So if I did on behalf of, if I did on behalf of my spouse.
Do they put it into your super fund?
No, it's cash. Tax rebate.
Tax rebate. Okay, let's go to the bads now. The bads are pretty bad.
The bads are pretty bad. I mean, they're dominated by three things. I mean, the one that people are focusing least on is actually the changing the concessional cap. I reckon this is the baddest part, Peter. But obviously, I think $25,000 is too low for everybody.
So if you're over 50, it was 35. If you're under 50, it was 30. So everybody has been forced to put less into super.
And particularly those...
That's bad.
And particularly those who are over 50 and perhaps haven't had the opportunity or didn't want to when they were younger or weren't working or whatever it is, now want to get some money to super and it's only $25,000. Way too low.
Bad for catching up.
Yeah, people should be jumping from the rooftops about that. That's unfair in my opinion. So that's change number one. Right. Change number two is the lifetime non-concessional cap of $500,000.
Now explain what non-concessional is. Some people don't understand that.
Non-concessional is monies that you have. So these are monies you already paid your tax on. This is your hard-earned.
Your bank balances.
Your bank balance.
You could have sold a house, had some money left over.
Could be a small business and have some money outside super. Want to get the money. This is the non-concessional cap. It was $180,000 per annum. Per annum? And you could do $540,000 over 3 years. So potentially over 20 years, you could probably get, $3 or $4 million into it. Now it's a lifetime $500,000. Now,
in 10 years, you could have done 1.8 million.
That's right.
This is a big change.
And they're going to measure it from the 1st of July 2007. And that's no typo, it is 2007.
They're going back?
They're going back. And the reason it's July 2007 is that if you didn't realise, and those of you who have your own self-managed fund, you'll know this, you report as your super fund reports to the tax office all the contributions that you make. So the tax office has records of all your non-concessional contributions since the 1st of July 2007. They say they might publish these, so things like the MyGov website. No, they'll probably work to this because it's pretty hard to actually go and measure this stuff if you haven't got good records. Yeah, go to sleep. All right. Now, the other thing we should say is if you're already over on that, there's no penalties. So but you won't be allowed to ever put any money into super and a non-concessional contribution. And for those of you that haven't, this is where it's really unfair, that $500,000 cap is now in place from budget night. Bad. All right, we're going to beat the bell and go more bad. Yeah, the other two bad, of course, is the retirement phase. You're only allowed to have $1.6 million in sort of accounts that are in retirement phase. So literally a cap on how much you transfer from what we call accumulation into retirement of $1.6 million. Lots of issues there for people.
What if you got $2 million? What if you're unlucky to have $2 million?
If you're unlucky, some would say lucky enough to have $2 million there at the moment, you'll have to get that back to 1.6 by the 1st of July 2017.
What happens to the 400,000?
And so you've probably got two choices. The choice that most people will do will be to roll it back into an accumulation account. The difference between an accumulation account and a pension account. In a pension account, the earnings on the assets supporting that pension are taxed at 0%.
The best tax
rate of all. And the earnings inside an accumulation account are taxed at 15%. So you're going to be paying more tax by doing that from the 1st of July 2017. Or the other option is take it out. You can increase your pension pay over the next 12 months. You work out what's best for you. I reckon most people will move back to the accumulation account. Final change, Peter, again, it hasn't got a lot of publicity, but transition retirement pensions, they're not abolished. You can have one, but from the 1st of July 2017, they'll be taxed, or the earnings of those will be taxed at 15% rather than 0%.
The best tax rate of
So
all.
about 90% of the reason why you have one has gone.
Okay, so therefore, a lot of super people will be super cranky about this.
Yeah.
Okay, the process. These aren't certain, are they?
No,
Paul?
not at all.
All these rotten changes are not certain.
One thing good or bad about superannuation is it all has to be legislated.
And ticked by the Senate.
And ticked by the Senate. So all these changes that have been talked about all have to go through legislation. Now, just to give you a scenario, that'll take in the minimum 3 or 4 months, right? We won't probably see the bills to do this till September, October, because the new government won't get back till late July.
And if Turnbull loses, a lot of this stuff won't, it's just irrelevant.
If a new government comes in, the Labor Party's already said that it doesn't like some of the retrospective aspects. You expect the crossbench will be against it. The Greens will probably be supportive. So I think the whole legislative process is going to take some time, and so that gives opportunity for people to do some lobbying.
Do you think the government might change some of these policies
I
during
reckon
election
that
campaign?
there's going to be a couple of MPs in some good Liberal-held seats, particularly maybe some National Party MPs or some senators, getting a bit of feedback. I know a lot of people are so upset about this, Peter.
And the coalition voters.
They may not be saying now anything, election campaign is on, but when this goes back to the party room in July, assuming that Turnbull gets back in, wouldn't surprise me if 1 or 2 senators think about crossing the floor on this. So I don't think any of these things are a laid down misere by any nature. And the other thing that's going to happen between now and actually the legislation is there's going to be a lot of consultation with industry. There are lots and lots of transitional issues to figure out here, right?
Yeah.
And so it's quite possible that some of these things, I won't say watered down, but there may be some other things that just they don't have such an impact on a transition.
And let's
basis.
face it, the Treasury would have taken advice from Treasury and some industry experts, but they've obviously missed some anomalies, haven't they? Those anomalies are going to have to be corrected somewhere.
Well, I don't think they thought it was retrospective. I mean, and so everyone's saying, and as soon as you start to talk about retrospective nature of taxation, people from all sides of politics jump up. They probably didn't expect Bill Shorten to oppose it, or for that matter, Paul Keating. I mean, as we saw on your program, Peter, I don't want to have a go at the Treasurer, but when you asked him about transition retirement pension, he didn't seem to be fully top of his brief. So you really wonder whether these guys, the politicians with their 15.4% super rate, contribution rates, really understand what they've done here.
Most people don't, unfortunately. Yeah, okay, so what can you do about it if you're kind of worried about this mad super changes?
Well, I think the best strategy, let's talk about the strategy to actually improve your super, and then we'll talk about the lobbying effort. Yeah. Look, there is no urgency to do anything because this doesn't take effect till the 1st of July 2017.
But you can't make a non-concessional contribution over 500.
You can't make a non-concessional contribution since budget night over 500,000. So don't do that. So that's rule number 1. If you're already over 500,000, don't put any more in. The only other thing you can do in the short term, there's 2 things to do. One is maximise the current cap. So this year's caps, $35,000 concessional contributions if you're over 50, $30,000 if you're under 50. So see if you can maximise that, and you can do that again in the 2016-17 financial year. Yeah. And then also, as we've talked about on Mad About Money a number of times.
Oh, you're saying there's 2 chances?
There's 2 chances.
Good point, Paul.
You've got
one before June 30 this year, and bang.
Yeah, depending what you've already done.
Yeah.
Right? And secondly, of course, we've talked about this on Mad About Money a number of times. All these strategies are going to eventually cap what you can have in super, whether it's Labor or Liberal.
Yeah.
You need to think about evening out your balances with your spouse. If you trust your spouse,
But of course.
Well, of course.
We're not gonna
And there's some strategies there and there. You can still do. You can split concessional contributions, and also if you are making a non-concessional contribution, do it in the spouse with the lowest balance. I think that's the strategy.
I think that the important thing about all these changes, it underlines the importance of either understanding super yourself or getting some advice around the loopholes that may well still be there even after this. But one last thing, with all these changes to super, do you think people are going to start looking property again more seriously?
I think they are going to go into property, but I think there's still, just so we said at the lobbying effort, there's an enormous opportunity. Politicians' ears all open at the moment, the next 8 weeks.
Yeah.
If you've got a Liberal MP or a Liberal Senator, I would get onto them, because I think, look, if we assume that...
stuck into them.
Shorten's going to make some changes anyhow if he gets back. Yeah. Some of these won't go ahead. Maybe some other bad ones, but they won't go ahead. If Turnbull gets back, well, it's really going to come down to a few senators and the back room. His backbench really haven't had a chance to opine on this. They'll say nothing publicly because of the election, but you should be at them now the next 8 weeks. This is the chance to make noise.
Yeah, so if you're mad about super and we're mad about super, go and get stuck into your politicians. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about super.